Great friends. This side Rahul Magan here is a Group Chief Executive Officer at Treasury Consulting and also a venture capitalist. I think that the voice is going in the right direction as far as this channel is concerned. There is a lot of action which is happening on the venture capitalist front nowadays, and I think that in the last 2-3 weeks, a lot of action has happened. Today we're going to talk about more action in that regards. So let's be in this video we're going to talking about the Peloton, the recent failure in the IPO, and that once again a Ponzi scheme which is running by the venture capitalist is coming into the picture. But before talking about the Peloton, we need to actually go at least 2-3 weeks back. So what happened that number one, say somewhere February, their WeWork was valued $47 billion. A lot of critics, including me, came in the public domain and said that how can a company who on paper claim to be a technological company, but the business model or the underlying business model is similar like we have the rent, hire and sale company. How can that company be valued at $47 billion? Well, you know that regulators are paid, the media is paid, sold, incompetent, so nothing happened. Eventually, the company continued to enter into the mess and so on and so forth. Within few months from now, Uber reported approximately $5.2 billion of loss in a quarter. There are companies who actually not earned $5.2 billion throughout the lifetime, but they recorded a loss of $5.2 billion. And more importantly, the recent news which is coming in the public space which claim that Uber is entering into the Brazil market, and they are expecting that Brazil will give them the profit. Time will tell. Third happened that slowly WeWork valuation came down, and WeWork wanted to go for the IPO, because we agree or disregard, the Ponzi scheme is very clear. First, you invest in a company, let the company be loss-making for several years, buy the media and especially the business channels, and invite the CEO, CFOs and all the dignitaries of the company and also the paid investment bankers to come and create a hype. People like us are less than 1% in the globe, so it doesn't matter. Most of the investors feel that if any big investment banker, without quoting the name, coming into the public domain and talking positive about this company again and again, it means there is something positive. Fill the newspaper every day with the advertisement story, so that every morning when you wake up, you will get a pick that, oh, it's a pretty good company, and slowly create a hype. Then what happened? Have a tie-up with the stock exchange, list out that company, hire the top evening investment bankers and get your money back and let the investor fool, who cares, reason regulators are paid. WeWork incident came up in the public domain. It's about 2 weeks that incident came in the public domain, in about a week's time when we got to know that Standard & Poor cut the ratings to junk almost of WeWork. But great regulators like Monetary Authority of Singapore, Federal Reserve, European Central Bank, Bank of England, and where they have the business, which is London. It is said that they have base as London, where Financial Conduct Authority said nothing. How can that possible that regulator is not watching that a $47 billion company, a $47 billion company is basically less than $5 billion, and they not only deferred their initial public offer, but the CEO of the company asked to step down. And not asked to step down, he actually stepped down. And the reports which are coming in the public domain suggest that majority of the senior management of the company is leaving because of the vacuum, which is known as the management vacuum. Just like in the case of the Yes Bank, when Rana Kapoor quitted, senior management left very hurriedly in Yes Bank, and today, I knew many people in Yes Bank, and almost everybody left at the senior management. Almost everybody left. In all of a sudden, three names came into the public domain, that is Goldman, JP Morgan Chase and Morgan. Well, there is a data which came in the public domain, and we are planning a video separately in this week. The title of the video is Initial Public Losers. But whatever limited data we got in the public domain suggests that M&A activity has went down in the year 2019, and the initial public, the fresh initial, anyways, the initial public offering is always fresh. The initial public offerings down by roughly 13%. However, I do not have the data with me, but because we always speak with the data. You can see that there is a hell lot of data we have with us. We never speak without data. We need to search out the data that income, according to some rough estimate, I take an indemnification, it might be wrong, that the top investment bankers of the globe have lost around 27% of their income within this year because the number or the quantum of the IPOs went down drastically. This is the limited information we have, more information we are collating. In between, another startup came in the public domain who wanted to be listed, and the name of that startup is Peloton. I don't know whether you know about Peloton or not, but Peloton is nothing but a social fitness company. I don't call this as a fitness company, it's a social fitness company. Basically, you have few machines of, like they call this as a bike. You can have bike, you can buy directly from them, or you can have them on the rent. I think the rental price is $39 per month, something like that, and you can buy whatever the buy price, you can check on their website. Well, this company is since inception is into the losses. And more importantly, the co-founder of the company went into the public domain and told a lie that company is merely profitable, but the hard reality is that company was never profitable. And this company went for initial public offering, and this company actually did what Uber and Lyft failed to do. So the failure which Uber and Lyft recorded on the very first day, this company broke all the records of the failures. And whatever information we got from a public domain suggests that on a very same trading day, within first 2 to 3 hours of that trading day, the share price fallen by 11%. I have already told number of times in my venture capitalist videos that, because we are also a VC in a venture capitalist video, that by the time your valuation is a private valuation, profitability doesn't matter, especially when your investor is SoftBank and Sequoia. By the time you list, profitability matters, because people like Paytm, the most intelligent business person of the globe, which is Vijay Shekhar Sharma, by the time Vijay Shekhar Sharma is not going by the IPO route, nothing is happening, because his financial statements not coming in the public domain, the analyst report not coming in the public domain. There is nothing which is coming in the public domain. In fact, the so-called valuation report which claims that Paytm to be a profitable company by 2021, basically this report is also not in the public domain. But once you become public, a public limited company wherein the general public invested 10 rupees, in case of Paytm 10 rupees, 20 rupees or 1 crore or 100 crore. Everything has to be in the public domain. That is the one thing. So the 3 failures we recorded, which is Uber, which is Lyft, both are Uber and Lyft almost having the same setup, same kind of business model. Lyft is relatively lower in size than the Uber, while in case of your so-called Peloton, it's a different company. We have one more company, which is Smile. I have mentioned the name somewhere. I will not definitely, yes, which is Smile Direct Club. So we have 4 examples. One is a Uber, which is Lyft, which is Smile Direct Club, and now it's a Peloton. We went to Google, took some data about the Peloton. Now, first of all, Peloton business model is actually both kind, which is direct and rental. Direct means you go there, you buy the equipment from them, they will give you the equipment. Rent means you go there and you basically buy on the rent, which is roughly $39, something like that, you can check. While in 2017, they recorded a revenue of $400 million US. Whatever figure I am quoting is US dollars. Until I say it is Sing dollar, it is Sing dollar. All figures are in the US dollars. While in 2017, they recorded a revenue of $400 million. In 2019, they recorded a revenue of $700 million, which is almost substantial increase. Why we forget it that the company end up in the losses as always. So we got the figure that on a revenue of $400 million, company recorded a loss of $48 million, 48. While on the revenue of $700 million, company recorded a loss of $246 million. It means almost 5 times the loss. Loss has grew by 500%. Now the income is less than 2x. Remember, In 2017, 400 million. Your losses, your in 2019 is 700 million, right? Which is less than 2x. Although I'm not, it's for 2 years. We need to understand it is for 2 years, right? While similarly in 2018 to 19, the revenue was the losses 48 to 256, approximately 5 times increase in the losses. I went on the Google and searched a lot about it, and I got to know that the company took the seed funding of around 0.4 million. I already said that until we said all numbers are in US dollars. In February 2012, they took the seed funding about 0.4 billion. December they took Series E. I don't know who is an intelligent person who created this term Series A, B, C, D, E, F. Now what about the company who have started from A and now at Z and still losses like Paytm, Ola, Uber, Smile Direct and now this Peloton. And today when I was on the Google and checking about the Spotify, I got the two kind of information and I was confused. Now one information suggested that Spotify end up in a profit, although relatively very low compared to the top line. And another article suggests that Spotify is going to face 290 million euro. 290 million euro of losses in 2019. Well, I don't know which article is correct because the financial information is not in the public domain. But for one company having two different kind of articles confuse people. Similarly, if we look at their funding history, then from February 2019 till August 2018, from seed till Series F, and they have tried crowdfunding. Remember, they tried crowdfunding. They end up receiving 995 million flat on a very rough note, which is approximately $1 billion. So $1 billion has already been raised, and irrespective of that, in 2018 you end up 48 million of revenue, net loss, while in 2019 you recorded 246, which is roughly 5 times. So within 1 year your losses increased to 500%. Now there is a very stark contrast which I received while getting data for this company Peloton. The public information suggests that the total valuation they have raised is $995 million. On a flat note, I call this as a $1 billion, which practically means that if I go with the most intelligent VC fund of the globe, which is Sequoia Capital, which say that post-money valuation equal to pre-money valuation plus your investment amount, basically whatever you invested, then companies like Paytm, companies like Ola and all, they had not received funding less than $1 billion. Then how come they turn out to be the $18 billion company? If I'm not mistaken, multiple reports confirm multiple valuation of the Paytm, and the latest I read is a $15 billion. Paytm not got a very heavy funding from venture capitalists, although they got a very considerable funding. They are at 15 billion and this company got 1 billion having valuation of 4 billion. Now my first question to the so-called venture capitalists, those who invested, I think Tiger Global is basically an investor here, that standing at $1 billion of funding with an investment with a valuation of $4 billion, which accounting principle suggests this, and what would if I link this with the Paytm? That's pretty important. Now we went ahead that who all are the investment backers of these, and we got a very stark information, which is that in majority of the cases, basically the startups cases, we have three common names, which is Goldman, JP and Morgan Stanley. We should not talk about Goldman, as Goldman is a leading investment banker of the globe, but at the same point of time we should not forget that one MDB scandal cannot be explained without appropriate explanation about the Goldman. So just like, I don't know, you know about Ramayana. Ramayana cannot be explained without Hanumanji, and Mahabharata cannot be explained without Lord Krishna. Similarly, one MDB scandal cannot be explained without Goldman Sachs role. Similarly, if you look at the JP Morgan Chase and the Morgan Stanley, in majority of the cases we have these three names common. Then I went ahead on the Google and I got to know that Morgan Stanley is getting threat calls or maybe facing a kind of class action lawsuit against them as far as the investor money in Uber is concerned. So what is class action lawsuit? If you do not know, class action lawsuit means that basically if there are 100 investors, those who feel that they got cheated, rather than filing independent cases in the court of law, which would not only end up wasting their money, but which would end up wasting the court's time as well, which is very precious. So they together join the hands and they have a common lawyer, one lawyer who will represent everybody's interest. This is class action lawsuit. I hope you remember that when Cambridge Analytica scandal happened in Facebook, one of the biggest issues for Facebook was the class action lawsuit. I don't know whether people went with that or not, but had people went with that, it would be a severe issue for the Facebook, because class action lawsuit is very, very severe. I don't recall rightly, in one of the oil leakage, in the history of the oil leakage, I do not recall the right name, I don't want to recall the wrong name. The lot of environmental bodies came together and filed a class action lawsuit. Now these three investment banker names are coming common. And today I got another news. We're going to have separate video on that, which is Goldman is cutting its exposure in the SoftBank Vision Fund. All different information coming every day and which is difficult to digest. So the first information came about the Vision Fund is that the two largest investors, which is the Saudi Arabian Investment Authority and some another from Qatar and some another, they decided to invest very modestly and also whatever profit they would be earning. Everybody know that this is a gamble which they are playing, wherein the house will always win and the success stories are only 0.5%. Then a news came that the Goldman and Chase practically raised their hands and said to the co-founder, basically the CEO of the WeWork, that boss, if you're expecting 10 billion valuation in an IPO, this is next to impossible. You forget that. Then a news came that the IPO got deferred. Then a news came that SoftBank was not happy and SoftBank wanted to get IPO deferred. Then a news came that SoftBank asking, there is a little sense of discomfort we have on the SoftBank board, and people on the sitting on the SoftBank board asking the WeWork to step down. Then the news came that SoftBank is taking mark-to-market losses on the WeWork valuation. It's a common sense. I do not have the data with me, because once I have the data, I'm going to talking about mathematically. But technically speaking, SoftBank might have registered a heavy gain of WeWork in their books. It's a common sense, $47 billion of valuation. But now the same 47 billion of valuation is less than $5 billion, which means that there is a mark-to-market losses of more than $42 billion which has to come into the books. And everything happened within this year. It is not that you recorded 47 billion this year and it went to 5 billion probably 5 years from now, somewhere 2024. No, it's not like that. From 47 to 5 billion, the journey happened in less than 6 months. Now the moral of the story is, I don't have quantification with me because I am searching for that quantification, and you know, until I have the quantification, I never talk about numbers. But one thing which is sure, that SoftBank have to record the mark-to-market losses, which is known as the fund accounting in the books. Now we seriously need to see that how come this fund accounting would happen, how the things would move, we do not know. But mess has already started. And now we got the last news about this regard, that Goldman decided to cut their ties on with the SoftBank Vision Fund. Practically the SoftBank Vision Fund, which was without vision, everyone was aware. Now this Vision Fund is going tear apart. Like tear apart is a word which I borrowed from cricket. Generally in the cricket commentary, people are using tear apart, like the bowlers tear apart the opening batsman or the opening slot of any country XYZ, right? Tomorrow we're going to talk about how Goldman is moving away. And if Goldman go, then JP Morgan will 110% go. And I don't know the role of the JP Morgan in the Vision Fund. We need to see, because we have a very limited documentation in the public space, basically the very limited definition in the public domain about the Vision Fund. Very limited. And what is the end result? The end result is that the Vision Fund is now ending without vision. But the moral of the story is that which is the final nail in the coffin, that the SoftBank, the son, basically the person who is controlling SoftBank now, he said in a public domain that it's good that the entrepreneurs do have the vision, but it should better end up in a profitability. Now I would like to end up my whole story, the whole information which I give about Uber, Lyft, Peloton, another failure, Smile Direct Club and all, with only one question. Only one question, which is, if SoftBank, who is writing hefty checks, having millions of dollars to the startups, those who do not have a right fundamental in place, do you really think that if SoftBank will turn back, or if SoftBank will raise their hands and say, I do not have the money to invest in a basically a gambling business, whereby you gamble on my business and so on and so forth, then my humble and simple request to you is that how many thousands of jobs will go once SoftBank will stop cutting the checks? And a link question with that link question. If SoftBank will stop cutting the checks, then the another VC players will definitely have to stop, because if the water is not coming from the glacier, basically the natural source, you cannot depend upon the water in the earth for a very long point of time. Just think over it, a pretty big mess is round the corner. But at the end, I have never felt shy saying so that this bloody paid, sold and incompetent media is really not interested to give this face of the venture capitalists. Rather, they conduct conference over conference, and recently we had a conference in Singapore. I am returning back to Singapore soon. Right, recently there is a conference wherein they again gave, I got to know so much positive stories about these people that it makes you crazy that one side the reality is this, while this PE and VC funds are giving you too many crazy things. With this, we thank you very much. You know my mobile number, which is +91 9899242978. You know our fixed income platform, www.fixedincome.global. Have a great time, and don't forget that this is the 900th video, 900. This is the 900th video of YouTube channel. We have crossed this in 5 years, and Treasury Consulting expected to cross 1000 videos soon. You can visit our second YouTube channel, which is Treasury X, TREASURYX. Treasury X is the channel wherein we are shooting 1 minute video. It's a video which we channel we decided to shoot the short videos. And don't forget to follow our TikTok channel where we talk a lot. With this, we thank you very much. Have a great time. Enjoy valuation game, and sooner or later your job has to go. That's for sure. Good time. Have a good luck.